Saray and Stephanie. Thank you for joining us on this recorded presentation. We'd like you to put yourselves on mute until the question and answer sections. Greater Nevada is finding a growing need for financial education from our community members. Each month, we will be showcasing a financial topic that we hope will help our community move forward together with financial wellness. If you're interested in learning more about these webinars, please check out our website at gncu.org and search for Greater Financial Wellness Hub. Today's presentation is on credit building and rebuilding. I would like to introduce you to our presenter, B. Pico. B has been a mortgage professional for over 6 years. She's an expert in all home lending needs. B will give you the knowledge and expertise to help you guide you through your loan process, find the terms that are right for your budget, and make all the legalities are completely handled so that the loan process goes smoothly. B has lived in Northern Nevada for the past 20 years. She has a degree in business management from Western Nevada College and loves spending time with her beautiful daughter and son. Welcome, B.
Oh, thank you so much, Michelle, for that introduction. And thank you guys so much for joining us today. So like Michelle said, I've been in this industry for quite a while now. So I've seen all kinds of different credit scenarios, issues, bad credit, good credit, great credit. I've seen it all. So let's get started with our credit building and rebuilding presentation. So in this workshop, we will explore credit scores and reports, learn how to access information about your credit, strategize on how to build and improve credit, as well as how to protect your identity and information. But first, what is a credit score? Your credit score is a 3-digit rating that tells lenders how likely you are to repay debt. Credit scores do have a range, and they range anywhere from 350 being the lowest to an 850 being the highest. There's also 3 credit bureaus. Those 3 credit bureaus are Experian, Equifax, and TransUnion. All 3 credit scores can be different and will most likely be different. It all depends on what the creditors are reporting to which bureaus. For example, let's say you have a credit card. That credit card may report to only 2 credit bureaus, for example, TransUnion and Experian, but not report to Equifax. Therefore, you'll most likely have a difference between all 3 credit bureaus. Here on the West Coast, most creditors report to Experian, whereas back east, most creditors report to TransUnion. Having a lower credit score, though, can cost you a lot more than just money and interest. Debt is something difficult in families and can negatively impact everyone in the household, and the price is not only paid in interest. 31% of people worry about debt in general, and 21% have said it causes tension on their relationships. Debt can also cause havoc on emergency situations because you might not have the funds saved for medical emergencies or future funds. 30% of millennials put off buying a home or savings because of debt. Now let's talk about some signs of debt distress. Signs of debt distress can be paying only the minimum on a credit card account. This leads to paying the most interest possible and can take years to pay off one debt. Using payday loans, being over the limit on credit cards and/or lines of credit, delaying medical and dental visits due to not having enough funds to pay for the services, living off credit cards, using the overdraft protection plan on your checking account to pay for the monthly bills or for your monthly bills, using one debt to pay another debt. This is a distress signal that I see the most often. Moving around debt to other debt will not help you in the long run unless there's a clear and cut plan to pay down that debt. Delaying one bill or floating to another overdue bill. So now that we've talked a little bit about distress signals, let's talk about the types of debt that there are. There are 2 different types of debts or credits. The first is a fixed credit. Fixed credit is going to be your mortgage loans, student loans, and car loans. You will notice that the important word is loan. Fixed credit will have a fixed monthly payment that is set up to pay off that debt in a certain amount of time. For example, a car loan. A car loan usually you'll get for about 5 to 6 years with the same monthly payment to get that loan paid off in full in a certain amount of time. The second is revolving credit. Revolving credit is your credit cards and lines of credit. These can be used for an indefinite time. You can borrow and pay it back on a monthly basis, and that credit is there revolving and ready to be used once it's paid. Do we have any questions?
Hi, B, and hello, everybody that joined. Again, if I didn't catch you on the introduction earlier, my name is Saray Helms. I'm the Community Relations Specialist here at Greater Nevada. During this presentation, we welcome you. We will have a few of these question breaks during the presentation. Come off of mute, type them in the chat as they come up. We will pause and I will either interrupt B if I think it's relevant then, or I can bring your questions up during these question breaks. Right now, B, we don't have any questions, so we'll let you guys kind of think of them and let those filter through, and I will catch you guys on the next question break. So for now, it's off to you, B.
Perfect. So next we'll talk a little bit about budgeting, that word budget. Creating a budget can be a tough task, but with the 50-30-20 plan, it could be a little bit simpler. How you'll want to think about it is 50% is spent on items you need, 30% is spent on items you want, and 20% of your monthly income goes into a savings account or a debt recovery plan. So, savings and debt recovery. With the 20% that you are budgeting, you can use those funds to start eating away at the debt or putting it in a savings account. Some ways to begin saving and begin lowering your credit debt is by the following. Maximizing your 401k is the best way. Oh, so sorry. Some ways to begin saving and begin lowering your credit card debt is by the following. Create an emergency fund with 3 to 6 months of living expenses. Maximize your 401k employer match. I feel like this is the most important. One, it's free money. You are saving for your retirement, and if your employer is matching what you are saving, that is the most important part to retirement. Pay off high interest and high APR debt. Contribute 15% of your gross income to retirement. Pay off lower interest debts. This should also be done by reducing your want expenses, which means cutting some expenses, correct? So cutting those expenses is freeing up money is going to be the best way to start paying down your debt. For example, cutting down on some unnecessary expenses like Starbucks or a ton of subscriptions that we all forget that we've signed up for. Eating out is a big one as well, specifically with the high cost of goods right now. And some debt repayment strategies. So there are 2 strategies for debt repayment. The first one we'll talk about is the avalanche method, where you start eating away at the highest debt first and work your way down. For example, if you have 2 credit cards, one with a balance of $5,000 and one with a balance of $1,000, you would start chipping away at the $5,000 credit card first and keep making the minimum payment on the $1,000 card. The second strategy is a snowball method. The snowball method is where you start with the lowest balances and work your way up. This is the exact opposite of the avalanche method, where you would start eating away at the $1,000 card and keep making those minimum payments on the bigger balance card. Either way, it's the same concept, just different roads to get there. Some of the do nots, what you want to not do when it comes to credit, is don't close out credit card accounts. Doing this will actually drop your score drastically. When you close out a credit card, it erases all that credit history and payment history you've had with that creditor and will bring down your score. Don't trust all debt settlement companies. A lot of companies charge a lot of money and it might not be what you are needing or wanting to do. So please do your research on which company will fit best with your financial needs. Don't hide from creditors. Really, there's no hiding from them. They will find you. And well, if you're going to cover the do nots of the credit, we also have to cover the do's. So these are all great ideas on what you can do to get a good credit score or manage your current credit. And now let's talk about if you can't pay some debts back. About 35% of adults with a credit history have had a time where they have not been able to pay a debt and it's gone to collections. In 2019 alone, there were more than 774,000 bankruptcies filed. Bankruptcy is not always the answer, and there are many resources that can help manage debt before a bankruptcy needs to happen. But what happens to these accounts that cannot be paid? When payments become past due, they first show up as delinquencies on your credit, then they will get transferred into a collection account. Those collection accounts will stay on your credit for at least 7 years, sometimes more. Collectors can also sue you with judgments, wage garnishments, and liens. There are things you can do when an account goes to collections. You can talk to an attorney and figure out if the debts are truly your debts. Communicate in writing with the creditor, but save all your communications with those companies. The last resort should be bankruptcy. The two most common bankruptcies is a Chapter 7 and a Chapter 13. Chapter 7 bankruptcy is the most common one that I see. It can take up to 3 to 6 months to discharge the debt. Income must be below the state minimum and may be an option for people who do not have a lot of liquidable assets or properties. With a Chapter 13 bankruptcy, you will need to continue making the payments set out by the courts. So income is used to make payments over 3 to 5 years, must have a high enough income to pay off debts, may be an option for people who generally earn a reliable source of income and can make a plan to pay off debts with 3 to 5 years. Any questions now? I know we went through that pretty quickly.
No, that was perfect. And actually, it was perfect timing because we do have a couple bankruptcy questions. And please feel free to answer to the best of your ability, B. Do you have any tips on how to recover from a bankruptcy to build credit? Maybe some good steps.
So when you have a bankruptcy, it's going to pretty much wipe out your credit, correct? It's going to throw it in the gutter. So you kind of have to rebuild from zero at that point. So my best advice would be to get a secured loan or a secured credit card through us, or your bank or any other credit union. But yes, definitely to get a secured loan or a secured card. That way, I mean, it's your money that you're going to be using, but you're going to be using that money to build your credit up again.
Thank you so much. I definitely think we look at it as rebuilding, and we just start somewhere and go from there, just as we were to start from a zero credit. And some secured products are a great way to do that. Another one, and this is perfect for you as a mortgage consultant, maybe you can speak a little bit more to this. If there is a bankruptcy on credit for 10 years, will I ever be able to buy a house?
10 years for sure. So that bankruptcy technically should drop off of your credit report after 7 years. But in order to qualify for a regular conventional loan, you just have to wait 4 years after the discharge date. For a regular FHA loan, you have to wait 2 years after the discharge date. That is with a Chapter 7 bankruptcy. Now, if it's a Chapter 13 bankruptcy, it gets treated a little bit differently because you are still making payments to those creditors. So you will have to get a court order allowing you to be able to qualify for a mortgage itself.
Thank you. Amazing answer. And I apologize. I actually missed this one a little bit earlier on. It came through our email, but can you give us a little example or explain what the difference between a soft inquiry and a hard inquiry on our credit is?
So the soft inquiry, right, doesn't take as many points away from you as a hard inquiry does. But most creditors, it's usually going to be a hard inquiry, right? When we're trying to approve you for a mortgage, an auto loan, we want to see the full picture to see that you are able to repay that debt back. So most of the time, it will be a hard inquiry. Soft inquiries don't happen very often. I know soft inquiries happen when bank accounts are opened, right? Because they do have to make sure that you don't have any huge collection accounts out there and things like that, but they're not looking for you to repay back any debt. You're looking for a bank account. So that would be a soft pull. But most of the time it's going to be a hard pull.
Perfect. Thank you. Yeah, anytime we look at borrowing money. So perfect. That is all the questions I have for now. Again, if you guys have any, this is one of the beautiful benefits of being here with B right now, is if you have credit questions, feel free, pop them in there and we'll get those answered now. And of course, after this, I will be sending out any information, so you will have B's contact later as well. So thank you, B.
Of course. Alrighty. So Balance, Greater Nevada Credit Union has partnered up with Balance Financial Fitness Program to offer you expert advice on navigating your financial obligations, investment options, and more. Whether your goal is to get out of debt, save for your child's education, or more, Balance provides certified financial counselors to help you achieve it. They also have, it seems like they also have Balance in Spanish, so it is bilingual. And next, we have a few more resources that you can reach out to as well for any type of financial education or literacy that you may need. But you could also always reach out to us. And that's it for me, guys. Thank you guys so much for allowing us to do this presentation for you guys today and inviting me.
Thank you so much, B. You did whiz through that, and I love that. That gives us some really good time to take in some questions, and I'm happy to share some resources as well. So we do have one question that came in, and I hope you are all welcome, like I said, to ask these questions. I know I definitely have a couple as well, even being and watching this presentation, so thank you. This next question, what do I do if I'm shopping for a car and I have lenders checking my credit report? Does it affect my credit score? And I love this question we talked about in this last one. Thank you for pointing this out. I think it's a great one. B, could you add to that?
Yes. So yes, it definitely does impact your credit score, right? So when you go down to a dealership and they are trying to shop for you for either a rate, a payment, whatever the case may be, they're going to send your credit or they're going to send your application to 6, 7, 8 different lenders. Every single one of those lenders will be a hard pull on your credit. So yes, it will definitely affect your credit score. So what I suggest doing is going to your credit union or bank and getting a pre-approval first. Once you're pre-approved for that car, nobody else has to run your credit. You take that pre-approval letter down to your dealership and say, hey, this is what I'm pre-approved for. This is where my loan's going. Show me cars.
I love that. And thank you for bringing this question up, because I did have a friend recently go through this. They didn't do their pre-approval through their financial institution, went shopping for cars, and each dealership that they went to had done a different hard inquiry. And sorry, I just want to ask my own question on this, if I may. As I know it varies for mortgage, do you know anything, or can you share anything about what the pre-approval rate for a mortgage versus maybe like a consumer loan is?
Like the mortgage, the interest rate itself?
Not the interest rate, excuse me, but how long that pre-approval is good for.
Oh, okay. So when I do a pre-approval for a mortgage, they're actually good for 90 days because my credit report is good for 90 days. Also, when you are mortgage shopping, it's a good thing to shop around, right? Every bank, credit union, lender, mortgage officer have different programs. We all have our different niches. We all have our different programs that we offer. Some credit unions or banks don't offer down payment assistance programs, some do. So yes, definitely shop. You do have a window of about 2 to 3 weeks to be able to shop with any mortgage lender, and they will pull the same credit report that was pulled the first time. Therefore, it does not affect your credit score if you go out and mortgage shop. I mean, it's the biggest purchase that you'll probably do in your lifetime, or at least one of them. So definitely try to do your research and homework on who's going to give you the best deal, or the best, not necessarily the best deal, but the best for your financial situation.
Thank you. Definitely. I know those pre-approvals and those time frames are a little bit different, so thank you. I love this question, and let me know if you'd like me to add on to this. A question says, I started working with a credit repair company, but not quite so satisfied. A-okay, but do we have credit repair at the credit union?
Sorry, I'm going to have you answer that one for me.
Yeah, absolutely. So thank you for asking this. There's a few different options that we do at the credit union. Just as Bea mentioned, we do have those secured products to help build and rebuild credit. But as we're a financial credit repair company, sometimes we'll go in and actually do the payment making for you. We don't specifically offer this service, but I'm going to send through here right now, just as Bea mentioned, we do offer a free counseling service. So depending on what your needs are, if it's budgeting or credit building, there is that service that we do offer. So there's a few things, but as far as the actual service and going in to make those, we don't. But we do offer services like this. Another one that I highly recommend that we will sometimes, like I've walked through just as a courtesy, and I will be sending some resources to you via email with this information. But via annualcreditreport.com, you can actually check your credit report, not your score, but your report with all of the information on there for free once a year. I recommend taking this information and going through there, and that will tell you the answers of kind of who you're needing to contact if there are places that are needing to pay back. And that's where we usually recommend to start, as your credit lender would do that. But typically when you have that credit one-on-one company that's going in to do that for you, you're paying a service for that. So this is just a little bit more of a DIY route, but absolutely the same skills that are going to get you there to help you rebuild that credit. So I will send some of those in the chat, but also look for those in email. I hope that answered a little bit of that question. I have a great question. So on the point of, oh, actually, I see another one come in. I'll start with yours first. Does this credit boost from Experian? Oh, I've heard of this Experian Credit Boost program help with credit scores, and can it help with purchasing a home? Have you heard of this Experian Boost? Okay.
So I think the boost is the averaging, right? The averaging credit scores now. Is that kind of what we're talking about?
I don't know as far as I do, but I've heard, I haven't personally used this product, but I hear really great things from some of my members and people that I know have personally used this. As far as my understanding is, and please, I'm not an expert, but it's a way to track on how you're making your payments, and those are actually reporting to Experian. Just your regular bill payments, your electricity, where somebody may not have a credit account out yet. This Experian Boost program, I heard, is amazing to at least get you started of building that good relationship with Experian. So I'm sure that could, in the long run, absolutely help you. The whole point of it is to help build credit. So buying a home, I could only imagine.
It definitely helps. Yes, I have seen this on credit reports. Well, you'll see utility bills like your phone bills, water bills, electricity bills, things like that will be on your credit report. Those items don't normally report to credit reports unless you default on them. Then they become collections. But through this program, they start to report on your credit report that you're making these monthly payments. So it definitely helps you boost your credit score. Yes.
I love that. That's a brilliant option. Thank you for bringing that up. Yeah, I hear amazing things about it. I haven't personally used it, but everybody that I hear does use it has only said good things. So thank you. We're not personally associated with it, but I can say that I've only heard good things about it. If I can ask this next question, I think this is a huge one. Thank you for whoever submitted this. My credit card company offers a credit scored on my login. So they have USAA or Credit Karma. Is this a true representation of my credit? I've had differences in the past.
Me and Credit Karma are not the best of friends. Credit Karma will normally not be a true indicator of where your credit score is. They don't take into consideration the full picture of Experian, TransUnion, and Equifax to be able to give you your exact credit score. So most of the time when I pull credit, it's going to be very different to what you see on Credit Karma. And the reason is because they just don't have the capacity to be able to pull in all your creditors, all your history, everything that we would be able to pull through a credit report. I mean, it's a wonderful tool though to track your credit, because obviously you want to be able to track your payments. Maybe you missed a payment, you didn't even know you missed it. It will let you know that. It'll kind of guide you, like you'll see it start to go up and things like that. Just don't be very set that that's what your credit score is going to be, but it is a wonderful tool to help you get your credit score up.
I love that. Thank you for mentioning that. I think Credit Karma is a great tool. I've heard people use it for or just with a lot of success. It offers a lot of kind of a good scope, but I would say take it with a grain of salt, because most people I hear, and B, I'm sure you can add on to this as well, it's pretty much always off of what your true credit score is. So take it and just know that it may give a difference. But thank you for asking that. And as with your USAA, perhaps the same. I would say maybe it's only showing one or some of those credit bureau scores, or maybe it's taking an average. I don't quite know, but I would say with any kind of soft inquiry that's happening like that, it may only be giving a scope of that credit history. And thank you. Yes, I did put that. That annualcreditreport.com is where you can, again, excuse me, if you hear my dogs in the background, mailman's here. This won't give you your score, but it will give you your report. So I often sit down with some people after looking at their report to just see where to even start. It's great to actually know where to go from that. And on top of that, I will post, we have some, B mentioned them on the previous slide, free financial education services. I actually will use this exact course that I'm posting here to walk through, after going through the free credit report above that link. This shows what's on your credit report and really how to read your credit report. I don't know about anybody else, but the first time I did this, I didn't even know what to expect. So this course really helped me, and it's helped a lot of people go, how do I even analyze my credit report? And again, that balance, you guys, please, I really highly recommend. That's one of my most used tools, and I will post that again. This Balance Financial Fitness Program. So not only we offer a few, thank you for pulling up that slide. That's perfect. I would love to go through these with you guys. This Balance Financial Fitness Program. This is offered in Spanish as well as other languages. So they kind of will link you if there's a different language that you prefer. Not only does it offer personalized counseling for different services, like I said, budgeting, credit repair, mortgages, just to kind of be a tool for that information and learning. But it comes in different varieties, which I really like. Not only are there articles, videos, there's podcasts that I listen to in my car. So I highly recommend Balance, not only for the personalized counseling, but it just has a world of tools in there. And then along with that EverFi course down at the bottom, these offer all kinds of anywhere from budgeting to how to help a grandparent bank. So it's such a wide variety of courses that we offer on this EverFi link right here. It's completely free, and actually all of these tools that we're mentioning are completely free. And open to all our community members, your friends, your family, your staff. They do not need a membership to use these. We welcome these to the community. So that EverFi link that I will post here, it gives about 5 to 10 minute click walkthroughs. So again, I found that really helpful for just my personal going through my credit report. So I'll post those in the chat. All right, so we'll give it a few more moments. Thank you guys. This was so quick, and I do want to mention this presentation is recorded, as well as some of our other presentations are recorded. They're all posted on our website. I'll post that here in the chat as well. So you can watch this one if you want to rewatch it, get some more information. We also did this one in the beginning of the month. So These will be recorded and posted at a later date here, but there's some other great information. I hope that you guys will join us on our next presentation. In May, we have Women and Retirement, and that's on May 11th and May 25th. And on that same link that I just posted is where you can register for those webinars. So I will give it a few more moments. Please, if you guys have questions, let those come in. But if not, I will leave it to Bea and Michelle.
I do believe we have another question about medical collections.
Thank you. Yes, that is, this did come up, and I really appreciate that this person asked this and whoever asked it in the last one, because it was great information. Bea, can you add on to that?
Yes, so medical collections, we of course look at, right, because they will be posted on your credit report as a collection. So we will look at them and see them. But we will not, for a home, for example, we don't classify those or even look at those as bad accounts. We all have medical collections. I mean, medical expenses in this country is ridiculously expensive. Sometimes your doctor doesn't even let you know you have a payment due and they just automatically send it to collections, right? And then you don't even know it until you look at Credit Karma or you're applying for a home and you're like, where did that collection come from? But yes, it does affect your credit score, but we will not look at it to qualify you for a mortgage. Also, they will be getting rid of medical collections here soon. Our government did let us know that they will now be taking those off of your credit reports here shortly.
I did see that
That's
update.
awesome to know.
Yeah, it recently got posted. I mean, just as we did our last presentation, this got brought up, and I mean, the article was posted soon right around that. So very, very cool information coming out. I'm going to see if I can find the article for us.
So for you out there, if you have any more questions, we have Bea, we have Saray. Perfect timing to ask those questions.
I do believe that on our last one, we had a question about credit limits and how much we spend on our credit cards and how it affects our credit reports or our credit scores. I believe that that's super important. So when you have a credit card, let's say you have $1,000 credit card limit on the credit card, you technically don't want to spend over 35% of your credit limit on your credit card. Otherwise, it will start to decrease or pull down your credit score on a monthly basis versus helping you out. So if you have $1,000 credit card, try not to spend over $350. You'll want to stay around that mark and just make your monthly payments or pay it off every single month to maximize the credit score.
Yeah, I see that fluctuation. I only use one credit card for vacations. And then it's so funny. I'll go, okay, I'll pay it off in the next month. And then you'll see the adjustment in your credit score. And you're like, I just put it on for 1 month. Come on.
Yep. I mean, it's so easy, right, to have your credit score go down, but it takes so much time and effort to have it go up.
That is true. So it looks like we still have someone typing.
Thank you. I'm so glad they just said Bea, information was very helpful. Thank you guys so much. It sounds like we answered a lot of questions and hopefully went over, I think, a lot of the main ones that usually always get asked. So we will hang in tight. Thank you so much. And then if you guys need to get off to an early lunch, we totally understand. We appreciate you welcoming or coming and joining us on your lunch break or during the middle of your work day.
Yeah, and thank you, Bea, and especially all those that are attending this event. For those who like more information from Bea, Saray will be sending out that email with the items that she had put on the chat as well. Please take a look and check your emails a little bit later. Saray's gives great information in those emails. And also check out our website at gncu.org and search for Greater Financial Wellness Hub for our next classes. Thank you all.
Yes, thank you so much. Yes, and
Thank
like
you.
Michelle said, if you need anything or have any questions on mortgages or credit scores with mortgages, please reach out. I'd be more than happy to help.
Thank you so much, B. I will be sure to send you guys that information. Sometimes the questions do come after, and that is totally okay. We're happy to answer those, and we'll send you direct emails and all those links so you're not missing anything. So thank you guys so much. Have a good rest of your day.